You know that old adage, don't fight the Fed? Well, in 2024, we believe interest rates are going to drop, and falling rates equals rising fortunes. On today's show, we're giving you our playbook. It's going to be a great show, so let's go. Welcome back to another episode of the What Do We Do podcast. I'm your host, Dewey, and on today's show, we're talking interest rates and how to take advantage of a new landscape we might be entering, falling rates. Last year in 2023, we had rising rates. And in the fall of 2023, the Federal Reserve has said they're done. Done for now. And as we enter 2024, they may be set to reduce rates. They've said as much as 3 times before we get to that election in November. So how do we manage that? How do we profit from it? On today's show, we're going to give you 5 investments to consider in a falling interest rate environment. So stay tuned and let's go. The economy is slowing. Unemployment is rising. There are geopolitical events and conflicts and wars all around the globe. There's even a U.S. presidential election coming in November 2024. So what does all of this mean for you and your investments? Well, one thing is pretty certain from this point. The Federal Reserve has topped out their interest rate rising cycle at 5.25 to 5.5, which is where they left the key rates in the fall of 2023. They've also now said that in 2024, they expect to reduce rates not 1/4, not 2/4, but up to 0.75%. What they're going to do has yet to be determined. When investing, typical investors look at stocks, bonds, cash, alternatives. In this day and age, we're even talking about crypto and other investments like artificial intelligence. So as we enter 2024 and get our playbook together, we want to explore each investment class, but understand ultimately how we'll make money, or perhaps how we'll not lose money. And in an interest rate environment that is set to have rates lower, that again is way different than an interest rate environment where they're at the bottom and they're about to rise. So as we look at investing in 2024, we want to have a playbook based upon the interest rate evaluation that we've come up with, which says we're at a 5.25 to 5.5 range now, and rates will be set to drop. What does that do for stocks? What does that do for bonds? What does that do for your crypto? What does that do for real estate, hard assets, et cetera, et cetera? We're going to give you 5 investments to consider in 2024 in an interest rate falling environment. The first investment we're going to talk about today is stocks. In an interest rate environment where rates are rising, it's a different environment for investing in stocks than when interest rates are falling. And if we now believe that interest rates have peaked and are going to be beginning to fall, we want to prepare ourselves for when that happens and even take action before it happens. And we'll need to look at what stocks historically do well in an interest rate environment where rates are falling. In this environment, it's not going to be the stocks that got us here in 2023. It's most likely not going to be the Magnificent Seven. It's mostly going to be, historically speaking, value stocks, stocks that pay dividends, stocks that do have strong earnings. So in this environment, be prepared, look for stocks that have cash flow, that have dividends, that are built for an interest rate environment that the companies can capitalize and the investors can capitalize as well. The second investment we want to look at in 2024 in an interest rate environment where rates are falling would be U.S. government bonds. In any environment when interest rates are falling, you want to understand that the price of your bond may be rising. That's the opposite of when rates go up, bond prices go down. So again, interest rates go down, bond prices go up. So you can have a double effect of your interest payment plus the value of your bond going up. That's in broad sense. In more detailed sense, there are long dated bonds. There are short bonds. There is this thing called the curve. And there's also this thing that we've talked about many times in the last year, cash. Cash is considered a very, very short-term bond. Maybe you can call it an overnight bond. So in this environment, cash is still paying over 5% for a high yield savings account or money market. And when you're looking at bonds, you want to compare your cash rate with no time, because there will not be any up and down of your principal. In an environment where interest rates are going down, the prices of longer term, longer duration bonds has the ability of the price of the bond to go up more than in the short end of the curve, as we say. So in this environment, please consider longer term bonds that can give you interest payments plus price appreciation. Now, in addition to US bonds that maybe are longer in duration and you can make some principal appreciation on the bond, because the yield curve is inverted, meaning that cash is still paying the highest amount of interest relative to those other bonds, you still want to have a very good position in cash. You don't have to tie it up. It's paying the most interest. So in this environment for 2024, you want to start with a pile of cash earning hopefully 5% or more, and also some longer term bonds that you can purchase now that may have the ability for their prices to appreciate. We call it a barbell approach. Besides stocks, this would be the second option for investing in an interest rate environment where rates are coming down. Number 3, the third type of investment we want to consider for 2024 in an environment where interest rates are coming down would be real estate, and even these things called real estate investment trusts or REITs. Now, when investing in real estate, as any other type of investment that pays out income, if the current income rate is at a set number and interest rates will fall, our thesis for 2024, then that means new issues or new investments will pay a lower amount of interest. So the interest that you have now earning on your investment will become more valuable. So besides that rate, which is locked in and higher than the new rates coming out, there's also the value of your principal. So you might get a double effect. Number one, you'll have interest rate payments that are higher now than they might be in 6 months or 9 months. So your value is in the payment, but also the property, the real estate may have some appreciation, or the piece of paper that is being paid for that investment will become more valuable to a person who wants to buy something that has the highest amount of income attached to it. Number 4 for 2024 will be foreign bonds, emerging market debt, other income vehicles that are outside the US. If interest rates fall inside the US and the dollar, which is associated with these interest rates coming down, becomes less valuable as well, a weakening dollar, you're going to see foreign bonds become more valuable as well. And in many countries around the globe, they currently do pay higher than the interest rate that the US bonds pay. So you'll have a situation where you may get more interest than you can with your US bond, but you'll also have a situation where the value of the dollar declining may help those bonds appreciate. Again, a second scenario where you can have a double dip. Number 5 on our list for 2024 and investing in an interest rate environment where rates are falling would be hard assets and other alternatives. Real estate is a hard asset, and we touched on that already. You want to find those investments that are not directly correlated to a rising economy or a decelerating economy. You want to find those investments that maybe beat to their own drummer. And again, in the world of alternatives, that could be gold and precious metals. That could be cryptocurrency. It can be a whole host of investments, so you'll have to do a little work. Also, please seek out some investment advice and recommendations on your personal situation from your financial professional. Do your work, get educated, and understand that 2024 will not be like 2023. It also should not be like 2022, but the investments that worked back then, by and large, will not work this year. That also does not mean you throw in the towel, sell everything, and start all over. You need to pay attention, do your work, understand what you own and why you own it. But if you take that time, you can have a very successful 2024. Well, the bottom line for today's show is this. We believe that in December 2023, when Jerome Powell said he was not raising interest rates and that the committee was comfortable with rates being from 5.25% to 5.5%, and that their next objective would probably be to reduce rates up to 0.75 points in 2024, gives us an understanding of where their mind is at and what possibly will be coming later this year. So we can make our investment hypothesis and our strategy based upon that. If you invest in stocks or bonds or real estate or other investments based upon long-term growth strategies, totally fine. If you invest in all those investments based upon other factors long-term that may be out there, again, totally fine. But in a world of uncertainty, what we believe is certain is interest rates. And in an interest rate environment that we believe rates will be falling, we have a pretty consistent playbook that we've laid out today. We hope you follow along. Well, thanks for tuning in to another episode of the What Do We Do podcast. And if you liked today's episode, please go to YouTube and hit the subscribe button. Go to Spotify, iTunes, or wherever else you listen to podcasts. Give us a follow. Give us a thumbs up. Please share this with your community, which is our community, because as we always say, together, everyone achieves more. And again, thanks for tuning in. With that, I'll leave you, as I like to say, live your best life, be radically generous, a great big booyah to ya. And we've been talking about interest rates and investing for success in 2024, but we're just getting started.
The opinions expressed in this program are for general information purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It's only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risks and possible loss of principal capital. Please seek advice from a licensed professional.